Hello everyone and welcome to today's major markets update for Monday, March 28th. I hope you all had a great weekend. I sure did. And back in California and in the thick of it, upside surprises sure looks like it, which is the hallmark of a bull. Looks like wave 3 of wave 1 is still underway. But please remember, the market does not have to adhere to any standard Fibonacci extensions and retraces and all that good stuff, but which is textbook. And we all know the world is far from ideal. So ideal is never necessarily always the case. I'll show you in a minute why we need to keep an open mind. Okay. With that, let's have a look at the short-term chart. I've updated the NASDAQ chart, and here we can see the low with all the labels, 5 of C, of 5, of 5, of C, of 4. That's a lot of labels, just to show you how many wave degrees we've been tracking. Nano, micro, minute, minor, intermediate, major, of primaries, etc. Lots and lots of wave degrees. So I know this can be confusing, but just to keep in mind what we're tracking. And now we're tracking the impulse to the upside. So far, so good. Wave 1 and wave 2 can also an A and a B wave. We don't know yet. We need to see 5 waves up to confirm. 5 waves up is my preferred view. So far, I haven't seen 5 waves up just yet. Those are the minor waves, and they should complete a intermediate wave. 1. Then we get an intermediate wave 2, and then 3, 4, and 5. So we're impulsing nicely higher. These are just hourly candles. Down candles are corrective. Up candles in not in red, so to say, are impulsive. And I have shown here the ideal Fibonacci extension and retrace based impulse pattern. We had a nice target zone here for minute 3, and then minute 4 here on the 23rd, barely reached the ideal target zone. Hallmark of a bull, downside disappoints, and it looks like we are now impulsing higher once again, potentially as a ending diagonal wave 5 of 3C, which is going a little bit higher than the ideal target. The ideal target for wave 3 is here, but it doesn't have to, okay? Fifth waves can always extend, and this starts to look a little bit more like a overlapping ending diagonal on the short-term side, but please remember, short-term is always a little bit more open to interpretation than the big picture, right? The big picture remains S&P 500 at around 5,500 to 6,000, and that's just simply, you know, keep an eye on the price. Same for the NASDAQ 100, and this could then eventually lead to a extended wave 3C. It's always the market reserves the right for that. It doesn't have to follow the standard pattern where you would say wave 3 tops here, wave 4 ideally bottoms here, and then wave 5. It did it so far, 3, 4, and now we're right here in this target zone. So we could move a little bit higher still, then drop, but we still only have 3 waves up. 1, 2, 3. I cannot make it 5. I'll show you this in a minute when we zoom out to the daily chart, because of course the hourly chart is always a little bit more fraught on an interpretation because there are more scribbles. So here we have the bearish perspective for the NASDAQ. This is now off the table, and I'll tell you why. Because this wave 4 should have topped here, and we're going too high, in my humble opinion, to make this a wave 4. I've seen this count where people try to force fit this into a impulse lower, 1, 2. You know what? No, if we look at the hourly chart, this starts to look too much of a impulse, too much of a good thing. Is it possible? It really starts to now become low odds because we start to retrace too much of this decline. I know we don't have overlap yet with 15,000, but again, now the odds of this bearish wave count that cycle 3 has already topped is diminishing even more than it already was because we're breaking higher. Just wanted to show you that before we continue with the bull party, so to say. So here is then the bull party, and then we have wave 3, 4, and 5. We already started to extend. The ideal wave 3 target zone is here, the ideal wave 4 and ideal wave 5. But the market doesn't owe us anything. It really doesn't have to necessarily do that. Why? Because here is the rally since the March 2020 lows. It was pretty much straight up. We had a couple of days of pullbacks, 2-3 days, and that was it. It just kept subdividing higher and higher and higher for months. And that would not surprise me if that's the case now as well. I cannot know that beforehand. I simply follow what is the known unknown, a standard Fibonacci-based impulse pattern. But the market reserves the right to not follow it at all. But that's all we can go by. And for now, things are moving higher. Okay, like I said last week, it looks like we're wrapping up these 4th and 5th waves. As long as these lows hold from last week, we can move higher, and we will move higher on breakouts. The breakouts continue to happen. Once I show you the summary slide, you see exactly what I mean, and that we were holding the support levels. It was 4365 on the S&P 500, and that the breakout would be bullish, and that's what we got. So here is then the Dow Jones. The Dow Jones is also moving higher. It looks like we had a small wave 3, a small wave 4, and somehow, fortunately, stock charts moved this one, and we should now be in this wave 5 of 3C here. So normally a third wave tops at around 100 to 123.6%. Okay, so I'll put in that green box here, there. Perfect. Then the 4th wave of the 3rd wave bottoms somewhere here, which we did there. Perfect. And then the 5th wave of the 3rd wave tops somewhere there. Perfect. So the Dow Jones is still nicely on track, nothing out of the ordinary. And once the Dow Jones is done, everything else will be done, of course, as well. So we have to simply bide our time, which means from a other index perspective that the S&P 500, the NASDAQ 100 simply can extend perfectly fine. Once wave 5 of 3 in the Dow Jones is done, we get 4 and 5, major 1, major 2, etc. So far, nothing out of the ordinary. It looks bullish, all right? It looks bullish. We're breaking out from the base. I can tell you my major markets trading alerts went long the Dow Jones again today. This is a classic breakout. It's already been massively productive and profitable on the 3-time ETF side for many days, as many of my systems went long mid-March and have been giving us nice handy profits. So please keep that in mind. My major market trading alert system combined the good with the better. This is very objective trading. You'll get the trading signal straight in your email inbox around 10 minutes before the close. Boom, boom, boom. You can make your orders if necessary or raise your stops, whatever is be done right on time. No worries there, and you'll sit on some very easy profits. Yes, there will be losses along the way. February wasn't easy. We definitely had a down month, but we were less down than the indexes. So that's always good because remember, it's not about the profits. It's first and foremost about as little loss as possible. Rule 1, rule 2, break even. Rule 3, profits. Everybody thinks the market is just like some money-making machine, but the market is actually quite the opposite. It is actually a money-taking machine because it moves money from the inpatient to the patient. Here we have then the NASDAQ 100. We had the bullish wedge breakout targeting 15,000. The ideal wave target, upside target, is 15,195 based on a 200% extension. Picture perfect, right? That brings this wedge right back to where, or the price right back to the start of the wedge. We can definitely extend, as I showed you for the NASDAQ, in that there will barely any pullbacks. So be it. I cannot foresee it. I can only foresee standard impulse patterns that the market then decides to listen to or not. And it seems like it's now extending, and the Dow Jones might be the underlying driver. However, I still expect a decent pullback soon, and then a rally and a drop. So that's my preferred view until proven otherwise, meaning, again, we can have a straight melt up like we had here. It's very possible. Okay, so please keep that in mind. Please be open-minded. That's why we always have stops in place. Oh, sorry. Here is then the regular NASDAQ in the hourly chart. Also here we have the Fibonacci extensions based on an ideal Fibonacci impulse pattern. It looks like we have a nice completed intermediate, or minute 3, minute 4. It just reached the upper end of the ideal C wave target zone, but failed to reach the ideal 4 target zone. So it did 1 out of 2. That's all we get. That's bullish. And also here looks more like an ending diagonal. We definitely have a lot of negative divergence going on, but divergence is only divergence. It's a condition. It's not a signal. Now we need to see follow through in the sense that we need to break below the previous lows, right? Bullish is higher lows, higher highs. Look at this, higher high, higher high, higher low, higher low. So we continue to make higher highs, higher lows, bullish. We've now reached the ideal wave 5 of 3 target zone in gray here, which is definitely a little bit extended compared to where wave 3 should top, which is here in green. That's okay. Things just move along the way they want to move along. It's not a given that they have to follow the ideal Fibonacci path. Many times they do, sometimes they don't. Oh well, so be it. We just follow along. Again, we need to see a pattern of lower lows and lower highs before we can turn even slightly bearish. Okay, so that is always the path we need to put on the table. The path is the ideal path, and then we'll simply have to see if the market's going to follow it. I would say 2 out of 3 times it follows it, and then it decides to do something else. Again, I have no signals for shorting whatsoever. My trading systems are all long. There's no short signal anywhere. This is the semiconductors. Is also making higher highs, higher lows. We had a few pullbacks, but this looks fine. Looks like we're starting to break out on the semiconductors in the sense that we've kind of been basing here between 34.50 and 35.50. So a breakout will target 36.50. Right, 36.50 gets us pretty close to where I had labeled this wave 1 originally at 37.50. That's just kind of like a guess type of placement. So higher prices first before we see lower prices. Here's the S&P 500. This is one way of interpreting the price action since the early January high, ABC lower, very simple, some sort of double 3. Couldn't care too much about the corrections. I'm not too worried about labeling corrections correct. They're just corrective. They're overlapping. And that's pretty much all we need to know. We're in the ideal wave 3 target zone. 46.02 could be ideal in this wave count, and then a drop and then a rally. As long as we hold above 4385, should be all good. Again, upside surprises. I don't see any downside surprises. Shorter term wave count, same here, 46.02 should be the ideal wave 3 target. Again, we only have 3 waves up, so it can be just a bounce. Yes, it can be, absolutely. I don't think so based on market breadth and all those things I'm seeing. And of course, people still being uberly bearish on this market. The market just keeps on moving higher, does exactly the opposite of what they think. Again, they're trying to fit the market to their opinion, but you should fit the opinion to your market, because then you'll be much more productive and successful in your trading. Looks like an ending diagonal, which is often more a little 5-wave-ish, I would say, than anything else. So I'm still expecting about 4600. Then we should drop to about 4430, and then a rally to 4705 would be picture perfect Fibonacci pinball. But again, the market doesn't have to do it. Slightly different wave count here as well. We're looking at 4615. Versus 46.02, so expect a top somewhere in the 46.15, 46.02, assuming this is going to follow the standard Fibonacci impulse pattern, right? That's why it's expected. Doesn't have to, can keep on breaking higher. I'll be the last one to tell you you should short this market. I don't see anything shortable unless you're really a very short-term trader that goes beyond my time frames. I'm still looking here for this ideal wave 5 target zone, a drop and then rally. I would really like to see this drop to wrong foot everybody once again. Will bring all the bears out of the woods, and they will be eventually dragged behind the shed and beaten up one more time when they finally get their get-go at S&P 500 6,000, but I don't think there will be a bear left by then, which is quite typical. And again, this is the rally since the March 2020 low. We can easily get this just continuous grind higher with only about 1 or 2 day pullbacks along the way. So don't be surprised if this is going to happen. We've got to keep an open mind and remember that the market does not have to follow ideal Fibonacci extensions, but that it is the only path we have to our disposal until proven otherwise. I see nothing bearish at all in this market, honestly. It's moving higher. Everything is on a buy. Nothing is on a sell. Everything looks good to me. So as a reminder, please read about the Elliott Wave theory if you want to refresh your course or need to catch up on it. Please watch my how to do videos on market psychology, trading psychology, and how to track corrections. Correction has passed, but that shows you how difficult corrections can be. That after every ABC, we can get another ABC and another ABC. You want to do it all yourself, trading system wise. You know, I can make one for you depending on the time frame, whatever you want to trade. Highly profitable. You can sign up for my trading alert service, get my trading alerts straight in your inbox. You act upon them, buy when it says buy, sell when it says sell. No opinions, trade like a robot. That's all there is to it. That's really all there is. Trading is utterly boring. You just execute, all right? Execute the signals. And that's all there is to it. Yes, there will be losses along the way. There should be plenty of winners along the way as well. There will be dry spells where nothing is working, and there will be wet spells where everything is working. That's just life. That's how it works for the best of all traders. But as long as you do 3 steps forward, 1 or 2 steps back, you're in the winning league. And of course, you can always contact me on other things, join my hedge funds, whatever you want to do. Remember, I'm not a market guru. I'm not a god. We all want to have everything exactly correct and boxed in, and this is the way it's going to go. Well, the market, as I showed you, reserves the right to do something entirely different. So I cannot forecast everything correctly. I'm not washing my hands in innocence, but it's about setting the right expectations, and that we always need to keep an open mind because we're dealing with a dynamic, stochastic, probabilistic environment. So all we do is anticipate, monitor, adjust, but we're always ready because we have our if-then scenarios. So that said, from last week in italic, that I was looking for the Dow Jones to hold 33,710. I think it did. I haven't actually even looked at it. Let's have a look. Did it hold 33,710? Yeah, I think it did. 33. It's all the way down here. So yes, it did. All right. It certainly did hold 33,710. Sometimes I don't even look at my own price levels. I just kind of get lost in all the numbers that I'm tracking. That's fine. So it was holding it. And then it looks like this green 3 and 4 of this larger 3, 4, and 5 of 1 are completed underway. Looks like more upside is ahead. Same for the NASDAQ100. I have it 1 degree lower on the minute scale. Looks like wave 4 is complete. Wave 5 should be underway to complete 3 in green and 4, 5, etc. Same for the S&P 500. Held, of course, 43.65 elegantly. We didn't even get close. So the standard impulse pattern is still the preferred path forward, as it seems to be for the moment. Semiconductors, I see no issues here either. Looks like an impulse. I think we can reach 36.50, 37.50. And as I wrote last week, if the indexes hold all these lower levels, 4365, 4115, 33710 on the Dow, the NASDAQ, and the S&P 500 respectively, and then move back above the highs, which was, of course, Tuesday's highs, then the impulse pattern continues to unfold. We held all the levels, we're moving higher, so the impulse pattern continues to unfold. And that's all there is to it. I got nothing more to say. I remain bullish until these lower levels go. And so far, they're not going. And then I have to say that I'm going to fit my opinion to the market. As long as the levels are not going, then I remain bullish. Once they go, I'll turn bearish. All right. I couldn't care less about any of the headline charts. Remember, also news is an old interpretation. It tries to explain why markets are moving. The market is currently in an environment. Tell me something that I don't know. We know the Fed. We know the interest rates with the QE, I mean, the quantitative easing that is drying up. We know the Federal Reserve is raising interest rates. We know there's inflation. We know there's a very unfortunate war going on in Ukraine. all these things, COVID, whatever, it's all water under the bridge. The market has priced all of it in. So please tell me something I don't know. That's what the market is looking for. It's forward looking. Everything else, you can just write it off, how bad and how unfortunate those events might be. But for the market, they barely matter anymore. So with that, thank you so much for listening. Thank you so much for being a valued premium member. Take care, trade safe. See you all on Wednesday. Bye.